Facebook, Instagram, and WhatsApp parent Meta Platforms forecast a weak holiday quarter and costly year ahead after it missed earnings estimates and slightly beat on revenue. That forecast knocked around $67 billion of the company's total value off the total value as the shares are down by about 20%. Are its plans to consolidate offices and keep headcount flat enough, considering that more than $500 billion it lost so far this year? Joining now to weigh in is MKM Partners Managing Director Rohit Kulkarni. Rohit, it's good to see you. You still have a buy rating on this stock. Some of your peers in the industry did not disguise their impatience or irritation or frustration with the company on the conference call last night. What did you think of how they're approaching all of these issues?
Patience, and more patience. That's what Zuckerberg wants from the street, and whether they have it, we don't know yet.
But does he deserve that patience?
Yeah. If you look back over the last 7-8 years, probably giving him some credit, we're building some of the largest platforms in the world. So looking ahead next 3 to 5 years, probably I would err on the side of giving him a little bit of benefit of doubt. But right now, they are in a big whirlpool of a negative sentiment. Nobody believes their ability to innovate, fight against Apple, fight against macro, fight against TikTok. So the headwinds are outnumbering Zuckerberg right now versus what his dream, his vision is. And I think there is also a messaging problem here. I think they are making progress versus Apple and TikTok, and they are getting hit on macro as well as Metaverse. So there are certain forward progress moves, but I think that's just getting masked by how they're messaging on the next year's spend plans.
Rohit, a buy rating would suggest things get better in the next 12 to 18 months. What gets better for this company in the middle of next year?
Over the next 3 to 6 months, I think one of the drivers would be macro, in my opinion. As in, they already talked about September and October felt better than what it would have been. They're lapping Apple effect. So there are two aspects of the headwinds that I think Facebook should start to feel better about. One is how they're tackling Apple headwinds and how some of the macro headwinds are ebbing. Beyond that, their AI investments should start with how their engagement is trending, and perhaps TikTok headwind starts to ebb and flow at that point. So we are talking about over the next 6 months. That's the way I feel. If I'm right, that's how the stock would unfold. But again, they need to prove that they can be disciplined with costs, and that I'm afraid may not happen for another 6 months at least.
What part of the metaverse does Meta Platforms actually have to get right, see some type of user kind of acceleration and adoption of what they're putting on the market versus what Roblox metaverse has already looked like for so many consumers?
Again, I think metaverse, that bucket of investment is going exactly in the opposite direction as compared to what we thought it would at this time last year. I think they're doubling down on the hardware software combo suite. It is almost 10 years ago, an Apple or a Android trying to create their own phones, create their own app store, trying to market the app store and trying to get engagement. All of that in one fell swoop for a new device that nobody is currently using. So I think it's a significantly larger vision than what we thought, and that is going to take more investments. And I think near term, all they need to show is greater adoption of their form factor. Whether that form factor improves over the next 12 months, we don't know, but just overall better adoption of form factor, and that's not coming in yet. So the sentiment is going to be negative, in my opinion. So the only thing they can do is show disciplined costs and reducing spend. If they just tell the world that, okay, we are going to be disciplined and not have more than 2 billion of losses per quarter in Metaverse, I think the stock goes up.
I just don't know when that's happening, right? But they didn't show any indication of doing that. To come back to the Metaverse numbers for a minute, Horizon Worlds, according to the Wall Street Journal, has only 200,000 monthly active users. 500,000 was the target the company originally set. When do you think they might get to 500,000?
It's been slow going. It has not been going in the direction that they have been. We are hearing more of not just direct to consumer, but direct to businesses, B2B play in the way they feel the VR headsets and VR capabilities may evolve over the next 12 months. So they gave around some tidbits yesterday around how enterprises may be using this. So it's still very early days. We won't see that a company with more than $100 billion in revenues per year, for that to start to show some impact, it's probably going to take a few $1 billion in revenues, and probably we are at least a couple of years away for their virtual reality segment to start to get to, say, $5 billion in annual revenue run rate, just to start to show some moving the needle. It's going to take a lot longer than that. That's where we say patience, patience, patience. And whether investors have that, so far they don't think they have that.
Well, investors are not exhibiting a lot of patience today. We'll see what happens going forward. MKM Partners Rohit Kulkarni, thank you very much. Appreciate it.